I have a question for you specifically when it comes to, let's call them tier two to tier three exchanges that still struggle from low liquidity. Why is that? In 2025, the tech looks good, UX, UI. Why is liquidity still an issue for some of these platforms today?
I mean, today there's a lot more insights and knowledge when you launch an exchange. Today, like one of the first questions an investor would ask you or would tell you, by the way, you need to budget in for liquidity when
Yeah,
you're actually doing your financial planning and you're doing actually your execution roadmap, right?
yeah,
And today you can actually call many of those market makers. You can tell them, hey, I'm launching with 20 pairs as an example. These are my constraints that I need you in terms of liquidity. Should be on average the spread, how much you should quote with certain price range, and for which pairs you should do it, right?
yeah.
And now, really, what I want to point out is that today, actually, when you look at it, liquidity is still extremely expensive.
Hmm.
So it costs a lot of money to actually get a market maker on board. And it makes sense, right? Because
Interesting. Yeah,
if you have many exchanges, why would a market maker
yeah,
natively come to you and not go on Binance if they want to trade or make
yeah,
markets, for instance, right?
yeah.
And so the liquidity is actually really, really very expensive. Now, what that means in practice is that you need to pay high monthly retainers to these market makers that they just show up and start market making for your perpetuals that you launched. And the
Yeah.
prices are just, I don't know for the audience if they know it, they're in the hundreds of thousands of dollars per month.